After closing at a 13-month high yesterday, the Australian share market is expected to lose some modest ground today, following a rather weak performance by overseas markets last night. On Wall Street and European exchanges, investor sentiment was hurt by a downgrade to the economic growth forecasts by the IMF, particularly that of the United States and the United Kingdom. Meanwhile, aftershocks in Japan also sent shockwaves around the market. And we also saw a poor result from US company Alcoa after Wall Street closed, perhaps suggesting that we might see some selling when US markets open again tonight. An hour into trade, the ASX 200 is about 16 points or 1/3% lower for the session, with some strength in defensive sectors like the banks helping offset selling across the resources. In company news, shares in Australia's largest standalone aluminium producer, Alumina, are down 3.5% to $2.60. That comes after the company's joint venture partner, Alcoa, reported disappointing quarterly results after Wall Street closed last night. Despite returning to profitability, sales fell well short of analyst estimates, and Alcoa shares were down nearly 4% in aftermarket trade. Alumina shares, which own 40% of the AWAC joint venture, matching that move today. But in better news in the resource sector, shares in the world's largest mineral sands producer, Iluka Resources, are up nearly 1% at $14.19 after the company reported a 51% surge in quarterly sales revenue. That came as zircon production was up nearly 10% for the period, but zircon prices soared. Iluka also forecast a further 20% growth in the second quarter. And on the currency front, the risk aversion that crept into global markets last night did see the Australian dollar trade lower. It's currently fetching 104.7 US cents. This is Toby Grimm for Young Stockbrokers.